So you want to buy REITs, but what's the actual best broker to buy REITs on at the lowest cost and that has the most variety? Honestly guys, there are so many brokers, and as a beginner it's very easy to get caught out and decide on jumping on one broker, but then using that broker for many years until somebody tells you and you realize that, hold on a minute, this broker is costing me a lot of money. I've seen this with a lot of people, and myself included. So in this video we're going to be going through 6 brokers that you might consider to buy REITs on, and I'll be giving you my honest look on them. And you might be thinking, hold on a minute, why is the video so long? Is there just not one broker that we can just use, a blanket broker for all scenarios? And the answer is no. Different people have different scenarios. Some people like to trade, some people like to buy and hold, some people have small accounts, some people have large accounts, and that's why we have different brokers. I'm going to give you my honest advice, right? I don't care about no sponsorship agreement in the future that I'm potentially missing out on by bad mouthing these brokers, because honestly I don't care, I don't need the money. So without further ado, let's get started. The first one is Hargreaves Lansdown. Now this one is the most popular, or one of the most popular brokers in the UK. The reason it's most popular is that it's been around for a very long time. These new platforms such as Trading 212 and Free Trade, these are sort of new, right? There's new startups. I mean, they have been around for a number of years, 5-6 years, but they're still quite new compared to the big boys, the old boys in this game. Hargreaves Lansdown is one of the old boys. It does have some good tools. It does have some good sort of research materials that you can actually look at different REITs on, and it does have a lot of property funds which are different to REITs, which you might be wanting to invest, so it's good if you want to do all of that in one place. Now down to the cost. It has stocks and shares ISA, which is great. It's free to open up, there is no charge for it. However, there is an annual account charge of 0.45%. It's capped at £45 a year, which is not that bad, it's not that shabby. However, the real cost to using this broker come in the share dealing charges. It is £11.95 per deal if you do 9 or less deals per month. Now, what counts as a deal, guys? You might be thinking, well, a deal is indeed a trade. Either you're buying or selling. This is a crazy charge. 12k a trade. You must be mad if you think I'm going to pay this. It does get less and less per month the more you trade. So if you're doing like 20 trades a month, then it goes down to around £5.95. Not around, it does go to £5.95, so nearly £6. You might be thinking, I might have 1 month that I just want to put all my trades in. I want to buy and hold, and I just want to put it in the first month. Now they've done a little trick on us, these Hargreaves Lansdown guys. Now at least I think it's a trick. Obviously it's in the open, so it's not really a trick, but it is really strange. They've said, hey, if you do 20 trades per month in the previous month, then you can get the £6 charge in the next month. So it's really for people that are trading big lots every single month. If for example you do 20 trades this month, you'll be charged £11.95 per deal, per trade. However, next month's charges will be £6 a trade. So it's really bad trick they've put on us. You might be in a position where the market's crashing, you want to pick up loads of shares. You're going to have to pick it up at expensive costs if you don't obviously do regular trading. In the grand scheme of things, this is a bad broker in my opinion. You don't want to be getting your hands dirty with this broker unless you have a very large account size or you trade with very large trading sizes. Other than that, for the average person like me, I have stopped using this broker because honestly it's like robbing myself, right? It's just a bad way to waste money. I'd rather spend that £6 at Starbucks or something else. Like, if I want to spend £6, there's a lot of ways I can do it, and it's certainly not going to be up picking trades, especially that there's cheaper alternatives available, which I'll get to in a second. Now that's not the only charges they have. Another charge is the automatic reinvestment charge. Let's say your REIT pays a dividend, which obviously it does, and you want to reinvest that dividends, but automatically these guys will charge 1% of that payment. I mean, that's nuts, right? 1% for just doing nothing, for just reinvesting that money. It's just a bad way to run business, guys. I mean, yes, it might work for some people and you might fool some people, but you ain't fooling me. And that's why I'm not gonna be using this broker. So moving on, Etoro, next platform. Etoro is one of the most popular platforms in the UK, and that's popular because of its share copying feature. You get to copy other people's portfolios, so in real time you get to see what trades they're making, and automatically you are copying them. But let's not talk about this feature much because it's not a lot of people that are trading REITs specifically on Etoro, so it's not really worth talking about in the REITs case. But let's talk about the cost. Firstly, it's commission free. However, there is a $5 withdrawal fee. Imagine that, guys. You're gonna have to pay them to withdraw your own money. It's shameful, really. I think only casinos do this, but let's not go into that. However, there is some other fees and a lot of quirks that a lot of people don't know unless they actually have used this platform extensively. So the first one is that there is a $10 inactivity fee if you don't use the platform for a certain number of times. So it's currently, I think, 12 months. Crazy, right? You don't use the platform for 12 months and they charge you $10 a month for it. Number two is that they charge a 0.5% FX fee, so foreign exchange fee, when you deposit your money, when you deposit your pounds. The thing about this platform is that there is no FX fees while you're inside the platform. So basically, it's an FX fee of putting your money in. There's an FX fee of taking your money out. However, there is no FX fee per trade, which is really good, because if you're basically trading a lot of money and trading on different stocks every single month, you're not going to have to pay the FX fee on every single trade, which makes life simpler. First thing is that it doesn't have an ISA, right? Your ISA allowance of 20k will not be used here because you can't open a stocks and shares ISA. So for the short term, it doesn't really matter much, because if you're trading small amounts of money, if you're investing with small amounts of money, the chances of you making £12,300 in a year and you liquidating that money is fairly slim unless you get really lucky. However, for the long term, if you're investing every single year and you're capping out basically 12k, 10k or 20k a year of your investments, you're basically going to be hit with a large tax bill when it's time to withdraw. And if you're withdrawing for a large event like buying a house or something like that, if you're going to withdraw money at one time in a single year, it's going to cost you a lot of money to do that. So you want to avoid having brokers that don't offer a stocks and shares ISA when you're investing in REITs. So that's issue number one. No stocks and shares ISA. Issue number one. Issue number two is that there is a bad situation with Etoro and dividend stocks. Guys, before we get into how dividend stocks are impacted pretty badly for UK investors on Etoro, let me explain to you how the US tax system works for foreign investors. Let's say you invested in a US based stock, let's say Apple, and Apple currently gives a small dividend. Now, before the dividends is paid to you as a UK investor, America wants to take out 15% of your dividend payment. So for example, let's say you're paid £1 in dividends, they'll be taking out 15p. Now, the UK and the US have a special relationship, as everybody knows, right? They're best friends basically. And that's why the fee is 15%. In a normal case, for a lot of other countries, this fee or this dividend tax will be 30%. So 30p of every pound. You sign up to a broker and you basically sign this form, the W8 Ben form, I think it's called. And essentially, after that, you'll be charged 15% dividend tax before the dividends is paid to you, rather than 30%, which is very, very smooth. For Etoro, on the other hand, this situation is really bad. They are charging people 30% dividend tax currently. So it makes things unfeasible for a dividend investor to be on Etoro, especially if you're investing in US stocks. This thing won't impact you if you're only investing in UK REITs. However, if you do plan to hold US REITs, then Etoro is currently not the best option. Apparently, they are working on having the fix, but as I read a lot of forums and a lot of Reddit posts, this situation is still very much the same. So if you invest in dividend stocks on Etoro, especially REIT stocks in the US, you're going to be having to pay more dividend tax to the US, dividend withholding tax. So that's why, although the platform's good, it has a lot of popular REITs, I won't be using it for US REITs. Next, we'll move on to Freetrade. Freetrade is one of my favorite platforms. It has an FX fee of 0.45% per transaction. Their ISA costs £3 a month, which is pretty cheap. And they don't have any commissions like HL, as we discussed earlier, right? The robbing bastards. But unfortunately, not all REITs are in the free version. The first tier is free, so anybody can sign up to Freetrade and basically trade for free. However, you don't get an ISA. The second tier is that you get an ISA, but you have to pay £3 a month for it. The third tier is the Free Trade Plus. This is where you get the ISA, but you get access to a whole lot of stocks. So you might want to check before you actually use free trade whether your specific REIT stocks are in the free account, or you're going to have to sign up to the plus account. Now the plus account is pretty good, even though it costs 10 quid a month. First of all, you get access to having limit orders and stop losses, which are brilliant tools for executing stock trades at correct prices, at prices you want to be trading at. But the main thing is that if you deposit £4,000 into a free trade, they'll pay you a 3% interest rate on that cash deposit. So the money has to be sitting as cash. Now this adds up to £120 a year, which basically covers your free trade plus account fee, which is £10 a month. So it's basically free if you've got an extra 4,000 quid, available to just plug into the platform and let it sit there. You also can do fractional shares, so you can buy little bits or pieces or shares instead of affording or buying the whole share. Now the negative things about this platform is that it doesn't have a web interface, so you can only use the app. The second thing wrong about this platform is that it's not for trading. The platform is too simple. You basically can buy and sell, and that's it. There is no other tools or any research or any sort of fancy graphs available. The third thing wrong with this platform is that it doesn't have a direct debit. Direct debits aren't a thing. So you're going to have to deposit money every single time you want to indeed do a trade. So overall, I really like this platform. Now, this platform is quite new. And another new platform that has recently popped up is called Stake. Stake is another commission-free platform. They also operate a FX fee in for an FX fee out situation. So you're going to have to pay 0.5% when you deposit money into the platform and 0.5% when you deposit out. This may sound like a lot, but as I said earlier, it's pretty good for when you're trading because you're not having to pay the FX fee every single time you do a trade. The platform only does US stocks exclusively, and the platform is pretty nicely designed. So it's all in dollars. But one REIT they have is the VNQ, which is Vanguard's own REIT fund, REIT ETF. I have not been able to find this REIT ETF anywhere, and this platform has it, which is pretty good. However, in order to invest in this VNQ fund, you need to have an account size of £22,000, which doesn't make it inclusive for everybody because people are starting out and they don't have 22k, but it's still good nevertheless. I wouldn't use this platform if you're investing in a large diversified fund or REITs because it doesn't have that many REITs. However, if you have a very specific use case where you're trading a specific REIT that is available in its limited selection, then it's a pretty good platform to use. The next platform is indeed Trading 212. Now this platform charges an FX fee of a 0.15% per trade, which is brilliant. It's the lowest cost I've ever seen in UK brokers. The platform itself is really nicely designed. They've got a web interface, they've got an app, and that's why it's pretty good. It's really popular as well. They have a huge variety, and one of the good things about this platform is that it has a dividend pie / auto invest. Let's say you're investing in 4 REITs per month and you're trying to put 25% of your money in each of those 4 REITs. You can do that with Trading 212, which is brilliant. Auto investing is a must. The ISA is also free. However, the problem with this platform is that a lot of people can't get access to it. If you want to get access to this platform, you're going to need to sign up, and they put you on a waitlist. And once their waitlist is, comes to your name, then you can sign up. Yeah, it's sad because most people can't actually sign up to it. I still recommend putting your name on the waitlist because it's so much cheaper than any of these platforms I've mentioned. Now, although the app is great, it has attracted a fair bit of controversy on YouTube for not being that transparent with their business model and not transparent with their terms of service, which has changed a number of times. The next platform I'd like to talk about is IG. IG is a very popular platform because it's marketed quite heavily in the UK. But in terms of trading or investing in REITs, if you're doing 3 or more trades per month, then it is £0 for US stocks. So you're not going to have to pay a penny for US stocks if you meet that criteria. But you're going to have to pay £3 per trade for UK stocks, which is something I don't want to spend. If I can save that money using another platform, why would I use this platform? Now let's put this into perspective. You might be thinking £3 a deal isn't a lot of money. But let's be honest here. If you're investing £300 a month in a single stock, a £3 charge will be 1%. 1% is a lot of money. 1% of your total gains in your whole life will add up to a lot of money. So that's something you don't want to be doing, especially if you can easily avoid doing that and use another platform instead. If you're doing less than 3 trades per month, then you're going to have to be paying 10 quid for US stocks and 8 quid for UK stocks, which is absurd. Why would I pay 10 quid or 8 quid per trade? You must be joking here. Now, this is not even the end of it, guys. They charge an FX fee of 0.5% every single time you do a trade. And the second thing they do is they charge a custody fee for holding your stocks, £24 per quarter if you do less than 3 trades per quarter. And the platform isn't that great either. In my opinion, it's not easy to use. I struggled with it. I don't like the platform. And why would I use the platform if it's going to charge me more money anyway? So to round it off, let's look at the scenarios. This is how I would approach this. If you are a buy and hold investor, then trading 2-on-2 will be the best platform to use at this moment in time. And number 2, it's going to be free trade because it's a very, very similar platform. And as trading 2-on-2 has its waitlist, if you can't get access to that, then free trade is the next best alternative. The third scenario is that if you are a trader and you're basically in it to buy different REIT stocks and then swing trade them, then Etoro will be your best shout, especially if you're doing the US side of things, because you're not going to have to pay an FX fee every single time you do a trade, which is great. The third scenario is that if you are a buy and hold investor and you have a lot of money and you only invest in UK stocks, then HL might be a good broker for you. And I'll break this down into context. Let's say you are trading with £10,000 per trade. This entire transaction will cost you £24 because it's £11.95 to enter the trade, £11.95 to exit the trade. This will only add up to a percentage of around 0.24% of £10,000, right? So relatively speaking, £24 is relatively low if you are trading huge amounts of money per stocks per trade. And although it's still a lot of money you're shelling out, it's well worth it for a broker with this reputation. I hope you guys found that video useful and I hope you know now which brokers to use for your REIT investments. Thank you so much for watching, and please do hit the like button because it really helps out a small creator like me, and I'll see you in the next one. Bye for now.